The reason why I'm saying that GBP USD is bearish, right, and it's most likely going to continue to be bearish is because we're going to be talking about the excruciating difference between direction and entry. So some time ago, I received a comment from someone saying that I get the direction wrong a lot of the time. No problem. It is what it is. People haters gonna hate. People gonna say what they have to say. All right. Let me make something extremely clear. The mistake that I think a lot of traders make is the mistake a direction for an entry. So you may notice I might say sometimes possible buys, possible sells, blah, blah, blah. Right? Here's what you do, or here's how you should operate. There is an excruciating difference between a directional bias and an entry bias, meaning you can have the direction right or wrong. If you don't have an entry, you don't have a trade, right? So in other words, the whole idea behind what it is you do, you have to understand that before you even get into the trade, you have to understand where it's going, right? I use this example all the time with Tesla, right? Tesla is known for the self-driving cars and all of that. It's a self-driving car, but you still have to know where you want to go to tell the vehicle where you want to go. So it's going to engage for itself with the roads, but you still have to engage with it to tell it where you want to go. Otherwise, the car isn't going to know where you want to go. The market is a similar thing. The market, you cannot engage with the market before you know where it wants to go. So if somebody says that they think the market is going to sell or they think the market is going to buy, that is their bias. That doesn't necessarily mean that they have an entry. The mistake a lot of people make is they think that as soon as you say sells or as soon as you say buys, that you're in the trade, right? And there's also a distinct difference between the fact that you are entering the market or you are analyzing the market. So last week for NFP, I actually called out the correct direction, and it is still floating and moving in the correct direction for all of the US or the majors and even some of the minors and then gold and what have you, right? The interesting thing about that is if you really look at it, it was a no-brainer. In terms of the direction, it was a no-brainer. And it almost is always a no-brainer, right? In the sense of what direction it's going. It's actually very simple. Is there a reversal? If not, it's a continuation. Simple. That's how I look at it. Now, I want to break down very quickly GBP USD because I literally just not too long ago, maybe about an hour, 2 hours ago, or something along those lines, I called out sells or possible sells, I should say, on GU. Does that mean that I'm in the trade? No, I'm not. And I got the direction correct. So for anybody who thinks that I get the direction wrong, oftentimes or more times than not, that is fine. I am all right about that. I am okay with getting the direction wrong. The mistake that a lot of people make, in my opinion, is they mistake getting the direction wrong for getting the trade wrong. And even if I get the trade wrong, I don't hold that back either. I'll tell you. Here's the caveat with that, right? The reason why a lot of people cannot disclose how much times they lose, and I'll openly tell you, the reason why they cannot disclose how much times they lose is because their risk rewards can't touch mine, right? And this is a fact for the majority of the masses, right? You might say I have an 80% win to loss ratio. Okay, great. That's excellent for you. But what is your risk reward ratio? Because I'm telling you, I have, and anybody who knows me, anybody who's been looking at me or paying attention to me for a while knows that I have called out some really nice directional bias trades and not entered them, despite the fact that I am right. So I want to take a look at something here on GBP USD. If we zoom out all of the way on GBP USD, you're going to quickly realize that GBP USD is overall bearish. Now, this is a 1 hour time frame, right? And you could do this literally on any time frame, but theoretically speaking, if you're having problems doing it on the 50-minute like I would do, you are welcome to go on any time frame, right? The higher, the better. Now, let's take a look at directional bias because clearly I need to teach people that today, right? Clearly, because clearly the masses don't understand, right? Clearly, I need to understand, or need to get you to understand, rather, directional bias. So what we do to understand directional bias is actually very simple. And I just gave you the answer. Is there a reversal at a low or at a high? If not, it's most likely to be a continuation. And the reason for that is because one of the biggest things I realize in the market, the masses do this a lot. Even this morning, I was in a class with a student, and the student said that Euro USD was on an all-time low, right? Or not an all-time low. They said something about it being on a low, or the low since the last year, or something along those lines. And I told him, I said, Euro USD is going to go further. It's going to go down further, right? I think he said the low for the year, or the low since last year, or something along those lines, right? And I told him, I didn't even look at it. And I told him, just the fact that you are telling me that's where it is giving me the consolation that it's most likely going to continue further. And the reason for that is because as long as it is not a clear reversal, it should automatically be considered to be a continuation, right? Now, so we're looking at GBP USD, right? And for NFP, I said sells, that it would probably sell for the NFP candle, and that it did. And then it went up, and now it's back down, it's selling again, right? But I gave a directional bias. Did it mean that I sold GBP USD for NFP? No, it did not. Here's the thing. I was right about the direction, yet I did not have an entry. I'm doing the same thing again today. Right about the direction, but I don't have an entry, right? The reason why I'm saying that GBP USD is bearish, right, and it's most likely going to continue to be bearish is because that is what is visible. That is what is visible. No matter what time frame you go on to try to identify that, you'll see it. We can go as high as the monthly, right? All the way from, this is 2008, 2007, sorry. GBP USD has been bearish. Let's go down, right? If we want to look at it for all of 2021, right? Bearish. All of 2022 thus far, bearish, right? Since 2007, right? And then we come down on the daily. From since May 2021, it has been bearish, very bearish, right? With very few bull moves on GU. So if thus far, these three highest time frames by virtue of month, week, day, we're not talking about these down here. If thus far, month, week, and day are all showing signs of bears in recent time, in recent standings, okay, cool. We can keep going down. And you all know I don't do this. I don't use different time frames because I don't need to. But I'm trying to prove a point here. You can keep going down 4 hours, right? Even from June, it has been bearish, right? Bearish. June, this year, June, it has been bearish with the last big bull move from the start of June, and then, well, from the ending of June, it has been bearish, right? Let's go down again, 1 hour, bearish, right? Or having like the same June here, bearish. So if I'm seeing everything that is alluding to sells, you realize I have no trend line, nothing. No trend lines, no zones, nothing. I have nothing drawn on the chart. It has been bearish. Is there a reversal? What do you typically use to identify a reversal? Where do you typically identify a reversal? Typically, you would identify a reversal at the highs or the lows. It makes no sense trying to identify a reversal in the middle of the range, like here, because then it could still go down or it can go up, right? The point of a reversal is to identify it at the edge of the range, because that means it has gone the furthest it can go, right? Or theoretically, I should say, it has theoretically gone the furthest it could go, right? So I'm looking at it, and I'm looking at GU, and I'm looking at the fact that it has been at an extreme low recently, right? Literally the 6th of July, right? That was literally last week. It has been at an extreme low. This is where I would begin to look for a reversal, at this low. But here's the interesting thing. What I would then decide to do is, and without even drawing it, I would look at this one, which is the 5th of July, right? And this is the 6th of July. I would say, okay, cool. I would typically now begin to look for the reversal pattern, or signs, I should say, to confirm or deny a reversal. What are these signs, or what do these signs theoretically look like? You might find a W. You might find the inverse head and shoulders. You understand? Or you might find big wick rejections. Do you have any of these things? You have wick rejections here, but then it came back down. You have wick rejections here, but then how do you know that this is where it is rejecting? What is the interesting thing about what I'm going to show you is, yes, there are wick rejections to this area, but now it has created a new low. So you have to look for a reversal at this low now. So the fact that it didn't necessarily break this low, but maybe it did, because now we have to take into consideration data on other time frames. Did it break the low? Yes, it did. Yes, it did. So everything about what I'm seeing here, based on what I'm seeing, is the fact that GU, excuse me, GU has broken this previous low, this one here, and has created a new low. So if I am looking for a reversal, the fact that it's at the low, which is where you typically look for the reversal, I need to see it at this low. And the fact that it is not at this low currently, because this is current data, this is live data here, right? The fact that it is not at this low is the beautiful thing. It makes sense that in order for it to reverse logically, that it at the very least, get back to this low and then possibly do something from there. So based on that, and based on the concept that I always teach, which is if there is no sign of a clear reversal, it's not a reversal, it's most likely to be a continuation. That makes sense to me. That's why I would have said that for NFP, GU would have been sells. And again, for that, I would have been correct. It just so happened that it didn't continue the sell, but the NFP candle did indeed sell. And the interesting thing is, what I want you to understand is, right then and there, if it sold even further, I would have been right there, because this is ultimately where I think it's going to go. But it's all about quickly first understanding direction. So you can complain and say, I get the direction wrong, I get the direction right. Listen, you can say what you want. The beautiful thing is, not because I say something means that I am actually engaging with the market. This is why I am very deliberate with my words. Possible buys, possible sells. So for that, to anybody who thinks that the direction is incorrect, no problem. I'll admit to that. I will openly admit to that. I can tell you, and I've said this before, my directional bias is wrong sometimes. It happens. I can easily admit to that. But the thing is, when I am right and I get it right and I actually get to engage with the market, guess what? If I am right, I am very right. Most people cannot say the same. The reason for that is because, again, it's not about how many times you get it right. And I see this in almost every single video. It's not about how many times you get it right. It is about how right you are. My father always used to tell me this: is not what you do, is how you do it. So the fact of the matter is, I could be wrong 90 times out of 100. The 10 times that I am right will make up for all of the times that the 90 times that I've been wrong. You'd be so surprised how that works. And it's simple mathematics. Simple. Right? But you see, again, people are of the assumption, and this is a psychological issue I've quickly realized. People are of the assumption that if they don't do it, if you don't do things their way, that you're automatically incorrect. Right? Well, it is what it is, right? It is what it is. But in my opinion, and I could be wrong, I'm making this clear, GU is going to bust this low and keep going down, because the only way this is a reversal is if it gets to this area, breaks a little bit, stop hunts, and then pushes back up. If it does not, and it stays in this area for any extended time, anything more than 30 minutes, in my opinion, anything more than 30 minutes, it might induce, it might buy a little thing and then drop again. Direction over entry, my friends. Not because you see buys means that you have to buy it. There's a distinct difference between saying that is going to buy and actually buying it. And if you can't understand that, you shouldn't be trading. Plain talk, bad manners. What do you all think about this? Am I incorrect? Does anybody have anything to say? Anybody have any disagreements with that? What do you all think? What do you all think? I might post this on YouTube. What do you all think? Right? If it is you're listening to this on YouTube, comment it below. How many times have you said that you think something is going to buy, and it bought, and you didn't get an opportunity? And the smart thing to do then would to be not to actually engage with it. Do you agree with an approach like that? Do you agree with an approach like that? What do you think? Because if you're doing it the exact opposite way, where you say buys and then as soon as you say buys, you buy it, that's not trading. That's exactly what it sounds like. It's guessing. Because not because you say it's going to buy right from this very second means that it's giving you the opportunity at that very second. What do y'all think? Comment it below. Comment it on the video below. If you like this, obviously subscribe, hit like,